Welcome to Straight to Why, where we uncover the why behind the people, companies, and ideas that are transforming our world. And today we have a really, really special guest, Jenna Bussman-Wise. And Jenna's on our show today because she is one of the world's best capital allocators, which I'm going to ask her to explain because not everybody knows what that means. Okay. But she's also founded her own asset management firm called Tesser Capital. She brings to us this unique investing lens as well as this unique perspective on being a new entrepreneur. One of the big things I want to focus on in our conversation today is that, you've set up an asset management firm that not only considers the return on your investment, but allows clients to talk to you and help you structure a portfolio for them that reflects their underlying values. And that's something that I think was really in for a period of time and now is a little bit less popular.
Nobody wants to talk about it now.
No, but actually we should, because this isn't a gendered issue. Nope. This is really a question of what are your values and where are you putting your capital?
Yes.
So Jenna, with all of that, thank you so much for joining us on Straight to Why. And I actually thought I would start with just the basic things. One is explain to our listeners what I mean by being one of the best capital allocators in the business. And then I'd really also love everyone to learn more about your background.
Yeah. Being a capital allocator is really, I have 20 years of institutional asset management background. What that means is corporations, endowments, foundations, they all have balance sheets that there's operating dollars that happen, but also balance sheets that need to be invested. Mm-hmm. And so I grew up in the alternative investment space. I worked at a fund of hedge funds before the crisis. After business school, did a short stint on the trading floor at Deutsche Bank, and then moved to AIG Investments after the crisis to help bring their alternatives portfolio back in-house.
Which that has to have been a complicated job.
Oh, that was fascinating. I mean, AIG was recovering. We were a non-bank SIFI, systemically important financial institution. We reported to the Fed. We were a Goldman Sachs top hedge fund name. We had an activist investor. It was a little bit of everything. And we're trying to pay back the government. And the hedge fund portfolio at peak was about $10 billion. And there were actually two different hedge fund portfolios managed in two different ways: life insurance assets, property casualty assets, different risks, different returns, different asset mix, different everything. Large insurance company, highly regulated, went to a reinsurance company, different rules, Bermuda-based, et cetera.
Is that the first time you implemented a values-driven approach?
It kind of happened three ways all around the same time. I came into implementing values across an investment portfolio three different ways, and they were all kind of on the outside of my day job every day, meaning I was on the board of the Ms. Foundation for Women. Credit to the executive director there, Teresa Younger, who said, I want our endowment to be in service to the granting we are doing, and let's do it in the best way possible. Second, I joined a group called Gratitude Railroad. They still are in existence, 10 years old now. And it was started by a hedge fund guy and a private equity guy who said market rate returns implemented with a conscious capital lens can solve some of these problems, but it actually needs to be done. And I appreciated the market rate approach to that. And so they still do that. Seed Series A, they have a fund that invests in first-time fund managers. They have a community solar fund, a platform that's been built there. And then within AIG, right, I just kept saying, we're an insurance company and we're under reserving and we were trading at 70% a book and we're not charging enough. We're saying this in the earnings calls, like, what are we doing on climate? And I just call it was an internal grassroots organization of people who cared about climate stuff, saying, we are an insurance company. This is a business decision. What's our company's approach? And again, remember, this was the early teens, but we created an internal sustainability working group. The chief sustainability officer now was part of that group. It was really an internal effort. I was doing all of these impact things on the outside, but it was not part of my day job. So I think
so common.
Right? It's so common. And so then as you evolve, fast forward, I start working for a large private investment office where the stakeholders are sitting right next to you. And do you implement values into this? Do you do the philanthropy in conjunction with each other or separate? And, every group is a little bit different. And I just said to myself, okay, I have this skill set. I have this knowledge across lots of different types of stakeholders, across lots of different asset classes, across philanthropy and corporates and alternatives. And I'm
it's
like,
unusual to have
It is
such a
unusual.
broad view.
I've always said I am like 6 feet deep and 25 miles wide. You can either be really deep on certain, but I have to be dangerous enough to have a really good diligence conversation with the experts in every asset class.
Right. Or you're not doing your job.
Or you're not doing your job, and they think you are an average LP, a subpar LP. You know you're dealing with the smartest people. Wall Street is full of really smart people everywhere. Every piece of news impacts a multi-asset class portfolio. So you have every single thing. Also, in a day, you can talk about the yen carry trade, distressed assets in a bankrupt retailer, and then a third meeting is about carbon credits. Your day is fascinating.
That's a context switching, but a very interesting day.
Lots of context switching. But that's okay.
No, that's what makes it fun.
Totally. The background is just I've seen a lot of the approach that I'm trying to build here is the result of lots of different stakeholders across a lot of different asset classes, across a lot of different types of capital with different types of expected return, whether that's financial, impact, social, environmental, or both.
Yeah.
Right? And it's not easily defined ever.
I
have allocated capital on behalf of a variety of different institutions. The Wall Street Journal just put out an article a few weeks ago on the rise of institutional family offices and family offices being treated, those families with very large balance sheets operating in a far more institutional manner than they used to in the past. And I did work in the family office world.
Your name isn't as well known as it should be because what you do for some of the highest profile people. So it tends to be relatively quiet, the work that you're doing.
Oh, yeah.
But it's unique. Very few people have the ability to kind of think across all elements of capital and look at a total portfolio allocation.
Yes.
And we'll keep going on that. But I wanted to first get to you on why you decided to found Tesser.
Yeah. If you're going to be an entrepreneur, you inherently think there's a gap in the marketplace. You think something can be done better or improved, and it solves a pain point. I think any entrepreneur in any business, those are kind of the things that lead them to do that. And so I think for me, Tesser is solving all three of those in terms of there's gaps in the marketplace broadly. I think the integration of capital, whether it's your traditional investment capital, your impact market rate investment capital, your philanthropic capital, however that looks, and then your political social capital. Those are typically operated in 4 different ways, and I think they should be integrated. So I think the new age chief investment officer needs to be able to think across those types of capital in order to reflect a person, a family, an institution, and philanthropy's full representation of what they're trying to accomplish. I've seen everywhere in the endowment foundation land, the investment team sits on one side, the granting team or the operating team sits on the other side. There's no real overlap in what they're trying to do. For me, it's just kind of like operational inefficiency, where even in some of the most progressive organizations, the impact investing and the program-related investing is not talking to the investment team at all.
Is it also risk? In a negative way?
I think it's perceived. And then I think, generally speaking, within a lot of organizations, everything's just bucketed. We know these. The big institutions, they're siloed. Asset management firms, they're siloed. You have your traditional investing team over here. Maybe a firm has an impact investing team if clients want it. And then you have philanthropy and you have advisors over here. But that's really on how do you give away the money, not necessarily how do you integrate philanthropy strategically
into how you think about your total allocation.
Correct.
Right.
And
those
so
are three different things.
Those are 3 teams typically with 3 sets of incentives, most importantly, right? 3 different sets of incentives and a lot of lack of overlap and communication between the two. So I think a fully integrated approach says, and this is where it's for a lot of families, charitable foundations, how do we fully align our capital, all the types of capital, with what we're trying to accomplish and represent and influence impact in the world. And so there's a talent gap. I think there's a big talent gap, actually.
So you definitely saw a gap as it relates to the totality of how people are thinking about their assets and that silo. And by the way, the ironic thing is that most corporates that are relatively seasoned in the last, I would say 5 to 10 years have been very much focused on breaking down those silos. But I haven't seen that as much on the asset management side. I can't tell you the number of firms who have a one whatever policy, one firm, meaning let's cross-sell, let's break down barriers, let's make sure we're looking at the totality of risk. But that just hasn't happened in the same way in asset management.
No, and at a lot of these organizations, the investment team is compensated based on financial performance.
And that's
not
simple.
necessarily impact performance or the good you're having in the world or positive outcomes or number of green buildings built. So it's always an incentive problem.
Right.
It's always an incentive problem.
I tend to agree.
No matter what. Go through any business model, go through a culture issue. What are the incentives?
I know. I've said that so many times in my career.
Incentives?
I completely agree.
Yes.
In addition to your ability to put together those puzzle pieces to think about capital allocation in a holistic way, what motivated you to say, you know what else is missing? This lens across your portfolio of what are my values and are my assets working towards the values that I actually believe in?
Any person, family, organization really has to say, what is our organization's family's personal values, and how are all of my activities a reflection of those values? So I think we think about every day, we think about, okay, your friends are a reflection of your value, your community, where you live, how you operate, the clubs you're part of, how you're spending your time. Those are all a reflection of your values. But no one really interrogates their capital and say, okay, is this a reflection of my values?
And in some ways, it might be our most powerful tool.
Being a steward of capital flow is the world's best privilege.
I agree.
Right? Like it is, I mean, personally, I love it because it's so intellectually stimulating, but at the same time, it is incredibly powerful, right? Endowments, foundations, these big pools of capital everywhere. There's reasons podcasts exist of like keys to the kingdom. Everyone is allocating into all these funds exist because big pools of capital exist, but there's lots of barriers for lots of really great investment ideas, also getting capital flow for all sorts of reasons, right? Generally speaking, institutions need to like look at their investment capital and say, is it net world positive? Is it neutral? Or is it extractive?
One of the things I love about what you do is they're not your values.
No.
They're not common values. They're the client's specific values.
What is really challenging about this is that, yes, values are deeply personal to an organization, to a person, to members within a family. Different value systems. I think what makes that hard, and it's been hard for the impact investment space broadly, is jamming what the definition of values are given each issue area and what's good enough, what's not good enough. Like what you could think is perfectly fine, another person would be like, that is not perfectly fine.
I'm not okay with that.
Okay with that. Or like, that is not impact enough. Part of the challenge in building this business is I don't really fit anywhere. Meaning traditional investors, when I talk to them, and I grew up with them my entire career, think I'm way too socially minded around a lot of this stuff. Impact investors who are sole impact investors often don't think I'm not impact enough because I'm actually incredibly practical. I can give you the analogy. And then philanthropists, right or wrong, don't really trust investors, and it's just a different language. So what I'm actually saying is like you have to operate at the center of all of those, which means there's a lot of nuance and a lot of customization. At the same time, I equate this to health a little bit. You're going on a new fitness program. Maybe you're not going to be an Ironman. Maybe your portfolio is never going to be 100% impact. Can you marginally go from not exercising to exercising twice a day or twice a week? And then, maybe we go from twice a week to like 5 days a week.
No, on twice a day.
Listen,
yes, twice a week. Yeah.
Twice a week. You don't have to go from 0 to like 100% impact investor.
Yeah.
There is a lot of gray and in between that actually needs to happen and is very person, family, institution specific.
When your clients say to you, I want to lean in with my values, are they also willing to give up a return?
Depends. I think it depends on what pool of capital.
Okay.
That's the interrogation. The number one thing, and particularly, and we haven't even gotten into women and the wealth transfer. That was one of the other reasons for creating Tesser. Women have never really been centered in the financial services world.
Oh, yeah.
As wealth owners, we know the great wealth transfer is happening and how many trillions of dollars, $125 trillion by 2045.
I feel like consumer brands understand that. I think financial firms may not yet.
Sure don't.
So how do clients think about giving up a return, or if at all, relative to implementing a capital allocation strategy that aligns with their values?
I think it's just toleration, right? I think it is sometimes, and I think it's the deep examination. Some pools of capital or a certain amount of capital, if you are figuring out what is enough, you're like, I'm not giving up any returns there. That's perfectly fine. Or can we lean into these 3 issue areas that compete for capital? So that's where I call market rate impact investing. Mm-hmm. Like I do want new climate solutions. Okay, those are market rate. That should be market rate capital, and let's figure out how to do that. And then with philanthropy, particularly if you have a foundation or a DAF, which is a donor advised fund, what can you fund with some of those philanthropic dollars that is a little bit more strategic, where foundations, family foundations, philanthropic foundations, there's this beautiful tax thing called program-related investments, and you are mandated to take a sub-market rate and concessionary return. And so it's better than grant dollars, which have a 0 financial return, high social environmental impact return, but that blended nature. So I think this is why the entire holistic approach is super important, so that you understand which pools of capital have which types of opportunity set with which return expectations, whether it is solely a financial return, solely an impact return with social return, or a blend of in between. I think if you get really clear on what is enough for you, your family, your organization, you can math your way into what that is, right, with a strategic asset allocation. Then you can actually be very audacious on the other stuff. But you have to get really clear on like what is enough. I mean, that's the existential question for every human. But what is enough here, so that you can do some really dynamic things over here. Yeah.
And also, I think in many respects, what's a safe enough cushion?
And for women, that is a very important question.
Very important.
Very important.
So that actually brings up an important topic. I would love to talk about women as you think about Tesser, and what role you think Tesser Capital can play for women investors.
My personal impact issue area is gender equity. And so I feel like I have to create something that actually centers women as wealth owners, as investment themes. I think if you just dig under the surface, the systems and structures of our whole society have not been built centering us, our corporate cultures, our governance, all of it. And we know this great wealth transfer is happening. And we know it's starting to happen right now. And over the next 20 years, $125 trillion is about to change hands, right?
Imagine what that would look like if women were actually getting paid on par.
Correct. Not just paid on par, but then also have the same strategic asset allocation, same risk tolerance, and are at the investing table in the same manner.
Right.
So when I look at the legacy I want to leave on the world, I have a vision of gender equity that I will never see in my lifetime. But to go backwards from that, you only get there if women have the same amount of money. And they're making their own investment decisions. And they're doing things in a different manner, actually. But they have the same amount of money. And you don't get
equal choice, right? It's just equal choice.
For sure. Choice, access, opportunity. And comfort level. We know there's an education gap. We know there's a confidence gap with making investment decisions. And that gets reflected in a strategic asset allocation, which is maybe not as risk tolerant. And we see this all the time. Even women who are diligencing funds will do 5 calls to write a $250,000 check. A buddy will, after 9 holes of golf, will say, yeah, of course I'll write you a $250,000 check into your company. That happens systematically, right?
I know.
And so that is Women within these families are often in the philanthropic conversations all the time, but not in the investment decisions.
How do you bring them in to the conversation?
That's happening everywhere right now. Articles are being written on it. Family office forums are having forums just for women. How do women become really integrated into their office? And the stories that I have heard. One woman who came into her family meeting and realized the meeting had started an hour before she got there.
Ouch.
Yeah. She was not involved in the investment part of the meeting. Yeah.
Wow.
Right?
I'm speechless.
One whose trustee decided that she wasn't equipped, paid himself $2 million a year for the next 10 years so she would get her money 10 years from now. So there are barriers everywhere. Women who are within families who are trying to extract themselves out to do things in a more dynamic way. And there are lots of structures in place. This is a big part of the conversation.
A huge part of the conversation. But the interesting thing is it's not the only part of the conversation for you. So I think one of the things that somehow has gotten lost today is this idea that anything that is equity related means leaving someone behind. And that's not the goal. The goal is to give everyone a level playing field and to bring everyone along. And I think it's important that in what you're creating, you know what you're trying to accomplish is to benefit women, but it's not all you're looking to do because you want to be helpful to everyone.
When I say women-centered, it's just that women are at the front of my mind, not on the periphery.
Well, because that's your lived experience.
It's my lived experience. I have a wife. We've had to create everything for ourselves, and we've had to do it within a system that does not benefit us or is set up for us to succeed. If you can just shift things a little bit, even in how you're organizing your firm, workplace policies. Another reason I started this firm is the place that and I've worked at some amazing places. But the place that is a full reflection of me, I don't think actually exists.
Yeah, I haven't found one.
Right. And so I'm like, okay, well, then I think I have to create it. Mm-hmm. If a community doesn't exist that you want to exist, go create it. Mm-hmm. And then be willing to sit in the discomfort of getting there.
Uncertainty.
Massive uncertainty. I mean, but that's entrepreneurship.
Were you scared at all to become an entrepreneur?
Oh my gosh, terrified. Yeah, of course.
I think that's normal.
Yeah. You talk to other entrepreneurs and and there's a group of women within this asset management industry who have gone and done different things. And let me tell you, we're all talking to each other and we're all helping each other and we're all rooting each other on.
And we all like each other.
And we're all trying to say, actually, we could all win here. How do we all win? How do we set up deals where we all win? How do
we do it together?
How do we do it together? And how do we make it better for everyone? Mm-hmm. People don't want to admit that parental leave actually really benefits men too.
Of course it does.
And then that benefits the family, children. Benefits the children and the family. Equity is as beneficial to men because it releases a lot of the pressure that's projected onto you by these systems and structures.
Yeah. Is there anything about being I know you've done business activities on your own before.
Yes.
Is there anything surprising about it from what you thought might happen?
Nothing goes to plan. Mm-hmm. Being your own tech person is not awesome. Mm-hmm. Everything takes longer than you think it's going to take. And I have never felt more alive or have been the best version of myself ever. Uh-huh. I feel so grounded in myself, who I am, what I'm creating, and why. Every person deserves have the opportunity to express themselves fully. And so this is that for me, being a steward of capital on behalf of organizations, people, families that want to be more impactful. That is...
You're talking my language. There's a ton of rejection, which is fine. You can't let it bother you. There's something about operating in a place of pure authenticity to yourself that is so rewarding and so freeing, where you're just not tied down to nonsense that you don't agree with, don't think is a valuable use of time.
You don't have to engage.
No, you just don't have to engage.
You can actually have full agency. Like for me... Agency is super important.
Yeah.
And I think agency is important for humans broadly. Everyone wants and desires agency.
Yeah. And it's one thing, I think, if your client, I know as women, we get a lot of feedback along the way of how to unsolicited feedback, often, sometimes solicited, but often unsolicited feedback on how to be, how to dress, how to talk, how to walk, how to work with people, how sharp your elbows can be, all of those different things. And I think that when you're your own boss, the customer is the one who gives you the direct feedback. And it's visible in the sales, it's visible in the stickiness. It just all comes through in its own way.
Yes.
And there's something I think really rewarding about that as well, where no one's telling you to be less than how you are just because it fits them better. It's your clients who are saying, I love what you're doing for me, keep at it. Or, hey, can you modify the dial this way? And then you do. But having that, I think, is one of the best upsides to doing your own thing.
Yeah. And I think what is the result of that often, which again, as women is we are so used to being chameleons to our environment and people pleasing and all of these things, is that different ways to build a firm like this, right? You really see the RIA world is crazy. OCIO world is crazy. And scale. AUM.
Yeah. The fight for capital is real.
PE roll-up, sell, great return. I mean, these are great businesses.
Sort of. They've been troubled, but
right. In building this, I just basically took everything I learned on Wall Street and then said, does it have to be that way? At every level, does it have to be that way for me to be able to look myself in the mirror, look my children in the mirror, look the world and my communities and the society and say, am I making it better?
Amen, sister. The other thing too is that, you don't have to be everyone's cup of tea, but you want to be the cup of tea for the people who are value aligned with you.
Yes.
So I always think, not everyone is supposed to like you. If everybody likes you, you've made no accomplishments whatsoever in the world, because you have to actually anger or annoy someone to be doing something of any good.
Yes. My entire career, I have said, particularly when you're in investment committees, there's always politics and there's stakeholder management, and you're always filtering something.
And you're cognizant of that. You have to be.
You always have to be. But I often, when it is appropriate, do you want an actual opinion or do you just want thoughts? Generally, as an investor, I'm paid to give you an actual opinion.
Yeah.
But then we know a lot of times you actually don't.
They don't care.
You don't want an actual opinion or thought. It's the same with clients. Your answer is your answer. It's totally fine.
I always want an actual opinion.
So do I, but a lot of people don't.
Let me ask you this. What's the biggest takeaway from your work so far? What's like the one thing that you walk away and you think, okay, I really didn't know that or expect that? It was the biggest takeaway.
My biggest takeaway. Sometimes you're a little bit ahead of things. I have a very fast brain processing and I can see things before they happen. And I get there quicker often. And bringing people along, everyone should just understand. I get it. I think that has been a big one where I'm like, okay, I gotta slow down a little bit. It is wild to me, some of the friction for women actually accessing some of their capital. The number of stories it's not a one-off. We're in this moment, right? We are the first generation of Gen X women. We're the first generation of women that as a generation, we're not teachers,
nurses,
and
nurses. Admins. Yeah.
You can be anything. And now we're in perimenopause and we're still managing households and it's breaking. It's completely crumbling. And we're about to have access to a lot of capital. And that changes how the world can work.
It's a really interesting point that's going to stick with me for a bit.
Oh, yeah. No, I mean, I think about it all the time, right? We're at a moment right now. Yes, of course, there were the the first scientists and the chemists and the lawyers, and right?
No, but it's
as
more
a generation,
systematic.
this is a generation, right?
Yeah, it's a generational shift and it's systematic.
My mom could not get a mortgage by herself.
Right.
My mom.
Right.
My mom.
Right. And my mom's option was to be a teacher. That was it. And she wanted us to be able to do, her daughters, to be able to do whatever the hell we wanted, pardon my language. And we did, by the way. We went off and did whatever we wanted.
But guess what? Like, the systems weren't set up for us to do whatever we wanted.
Nobody was ready for me.
No.
I mean, I can tell you that much. What's your one good piece of advice for first-time entrepreneurs?
Start before you feel ready.
I did that too.
Because you're not going to feel ready. Be really discerning with your time, right? Particularly if you are starting from scratch. Be discerning with the people. I think for me, finding the right people to work with, to be in community with, like at the end of the day, it's always people.
Of course.
Right? So it's like finding the right clients, finding the right people, finding the right service providers, and being really discerning. That's intentionality. Be really intentional about all the things. And I say that coming from a place of privilege because the trade-off for that is sometimes that takes a lot more time. And some entrepreneurs want to race and sprint as fast as possible. And for me, I am running a marathon here. I'm here for the rest of my life. Like I'm doing this work. And if I do it and structure it well, I always look, Ruth Bader Ginsburg, Billie Jean King, Gloria Steinem, Angela Davis, like they still are doing the work. Obviously, Ruth did it till she died, but Billie Jean King launched the PWHL. She helped make that happen at 81 years old.
It's incredible.
Gloria Steinem still shows up to things 3 days a week. Like,
yeah.
So time duration. So I think for me, for entrepreneurs, is just figure out what that toleration is for you. Because if you're building something, maybe I'm coaching myself here, right? That is going to be outlast you or something that you want to be participating in for a long time, like building it really intentionally, which is often a time scale trade-off.
Well, let's talk about that. So how do you see it growing? Your service is really customized.
Super customized. I joke all the time. I am a custom home builder. I am not Toll Brothers.
Yeah, no, right? You can tell because you're going specifically deep really with every single client.
Yes. Yeah. It's kind of like the old ways the private banks used to work. Very personalized, very person, family, organization specific, which means it's not necessarily scalable in the short term, right?
Well, no, because you have to, in a good way, I think, develop the system and platform that is your secret sauce.
Yes.
And figure out how best to systematize it before you can scale it.
Yeah, and I think if you find the right clients, everyone cares about women's health. Great, you can create something that's a little bit more scalable, but I can't, my job is not to tell people what their issue areas are, it's to execute impeccably on their behalf, right? And bringing this 20 plus years of institutional asset management, knowledge, diligence, frameworks into the diligence and the effort that goes behind all of that. I mean, investing is hard.
Mm-hmm. Oh, yeah.
It is so hard.
So I think one of the things that I probably don't do a good enough job of explaining to listeners who aren't as familiar with finance is like being a capital allocator across all different types of buckets of capital and instruments, and not only looking at U.S. instruments, but looking at international instruments. Yep. And we could keep going, okay? Yep. Very few people hold that level of expertise. There are people who understand foreign exchange. There are people who understand oil products and futures. There are people who really understand stocks. I was one of those stock people. I understand fixed income instruments really well. You have to give yourself a lot of credit for the fact that what you're bringing to the table from a unique skill set perspective is the ability to look across the entirety of a capital allocation strategy and make it make sense.
Yeah, I mean, it's just puzzle pieces and it's risk
you
exposures.
You see that. Other people think, oh, dear God, I don't know how to mesh these risks together.
Yeah, and understanding what are the underlying risks that aren't super obvious.
Right.
Either,
well, that's a huge issue.
Yeah, no, I mean, listen, career paths have different ways. And I think mentors tell you different things. And I had some people who told me, become an expert in one thing. Right? Like go really deep and become an expert. And I didn't know if that was the right advice. And I kind of ignored it. I call myself an expert generalist, right? Like it's actually a way of thinking. And I think that comes back to the liberal arts education on just like learning how to think and learning how to be really discerning. But yeah, across asset classes, it's learning what matters most for upside risk and downside risk, and then putting those different pieces of the risk puzzle together in a way that has a good expected return and volatility profile and correlation expectations, etc. Yeah, and it is, I mean, but that's why I love it. Like, if you are an intellectually curious person, this is it's so fun, right? Because, and it's also overwhelming, right? So I have been a generalist my entire life across all different strategies and asset classes. And as you become more senior in your career, you take on more asset classes. And it's really just learning how to ask really good questions, figuring out what matters most to any specific investment opportunity or what matters most to the client. Which of those issue areas matter most and where do you want to lean in? And and it's really getting to the heart, straight to why. Like, it's really getting to what matters most for these stakeholders and what reason, and then putting those puzzle pieces together to get you there.
Jenna, I cannot tell you how much I have loved having you on the show. I know you're going to be a phenomenal success.
Thank you.
And all Redhead Power is behind you, as well as a group of women who really want to see you win. So thank you so much for coming on the show.
Thank you so much for having me. This was wonderful.